One, two, 1, 2. Can you hear me? Am I on? Am I on? Yeah, we are on. Okay, I think we got that. Great. Thank you so much. Maybe we can make a quick start now that we are complete. Good afternoon, ladies and gentlemen. Welcome to a session on something that is extremely topical: central bank digital currencies. We've seen a lot of action towards the beginning of the summer, and we will see more action in the fall. And what time to better discuss this topic than in the annual conference of Bruegel. And I have really a stellar panel with me today to discuss a number of different issues. And first of all, let me welcome everybody for coming. I will start with Commissioner here on my left, Commissioner McGuinness, who has been on our conference on a number of occasions, this time talking about CBDCs. Other times you talked about Capital Markets Union, about financial literacy that we both care about. All of these things are related actually somehow, and I'm delighted that you've accepted our invitation to come back. Here on my left, I have Mr. Jose Antonio Alvarez, who is the Vice Chair from the Grupo Santander. Thank you very much, because you will bring the industry view on CBDCs. Oh yes, well, no, we will certainly ask you to do so. And I'm also particularly delighted to welcome John Roller, the Governor of the Central Bank of Bahamas. Governor Roller, thank you so much for taking the time. We're particularly happy to have you in our session to give us your perspective on CBDCs. So let me start with the numbers. We always do that at Bruegel. There is now almost the whole world that is actually engaging in the creation of CBDC, central bank digital currencies. About 130 countries, they are at some level of development from the very initial point all the way to actually having CBDCs. 11 countries already have CBDCs in action, so they are operational, and this is very much why we invited Governor Roller to come and share his experience for us as a country, representing a country that is already using what is called the sand dollar, and of course on many more issues than this. And in this, I will ask you to sort of reflect a little bit on your jurisdictions. Obviously, Commissioner, would like you to comment on, first of all, where are we on the development of the digital euro? There is, even talking just before here to our participants in the conference, there is a lot of let me just exaggerate it a bit, a lack of understanding of what the digital euro are. So I think we will really benefit from your explanation as to what is a digital euro and how is it different from what we have, the euros we have digitally, if I may call it this way. But also I would like to find out, and here I will turn to all three of you, to understand the motivation for engaging in such a huge project, which is a year project and something that is preparing for something in the future, as well as the present, but certainly something in the future. I'm hoping to go to more in details and understanding what is the experiences of CBDCs and what perhaps we can learn from also other countries, certainly from the Bahamas, but also views and knowledge that you may have from other countries, which I think is absolutely essential. And then, as with all things that we discuss nowadays, there is also a geopolitical element into them. And I would like us to reflect a little bit, if you can give us your take on what is the geopolitical relevance of CBDCs and what do we gain or perhaps lose as a result of engaging in this project. So with that, perhaps I can start with you, Commissioner, on the digital euro, the equivalent of a central bank digital currency for the euro area. Tell us a little bit about what it is and where we are currently the legislative in terms of legislation, but also in terms of the next steps.
Well, the stage we're at now is that we have a proposal out there. So it's with the European Parliament and the Council. But that took an enormous amount of work. And maybe to go further back, that this work is jointly undertaken by the ECB and the European Commission. And the reason why we have legislation is to give it legitimacy so that there is a democratic oversight of what is something that is unique. It hasn't happened before, certainly in the euro area. And it's not about today, it's about the world of tomorrow. So I very much liked your introductory remarks where people are, they don't really understand. I didn't fully understand. I had to ask all of those questions: who, what, where, why, when, particularly the why question. And of course, the reason why we are looking at this, and the ECB will make the decision, not the Commission, it will be an ECB decision to move forward or not. But the reason we're doing it is because of what we're seeing in terms of trends for all of us. So cash is less in use. We are using, our cards, our phones to buy. We're doing e-commerce. And if there were a time when cash is very much diminished, then where do we have the public money, the central bank public money, if it's not in cash? We need a digital form of that. So when people then say to me, but I use this, so it's not, is it the same? And I say, no, it's not the same. This is where we're saying that a digital euro will be cash-like and give you lots of flexibility and benefits, including to make offline payments. What I like about the fact that we're discussing it with the experience from the Bahamas and with the audience is that we do need to talk about it a lot before we understand the many nuances around how it might be introduced, the changes that members of the European Parliament might want to put into the legislation. I'm sure the industry have issues, but always bearing in mind that had we sat on our hands and were not looking at this, I think in about a year or two's time, people would have been saying you were asleep. Why didn't you look at? So the work of investigating the introduction of a digital euro was hugely important for the ECB and for the European Commission. Now the proposal is out, and I keep saying, and I will repeat here, let this happen quietly and slowly. So there's no pressure on Parliament or Council to finish this piece of legislation, but rather to look very carefully at the elements in the proposal, and of course it will be amended as they see fit, so that the next Parliament and next Commission will be the likely, if you like, holders of the pen at that stage. But I repeat the fact that the preparation work was important because we are all going more digital and using less cash. I have to say, though, cash is still king for many people. And while we introduced a proposal to launch the legislation on the digital euro, we also, at the same time, on the same day, launched the cash questions. So legal tender for cash, that it must be accepted, because I didn't want our citizens to have a sense in which we are only pushing a digital future. I also wanted very clearly to say that as Commissioner, I want choice. I want to be able to use cash and I want to be able to use digital. And I think citizens want to have that choice. And it's something we may come back to later on, because I think as this conversation deepens, people will begin to say, gosh, do I really want only digital? How are we going to ensure that cash is accessible and usable? And I think these are healthy conversations for not just the Eurozone, but I think for all countries.
But if I was to ask the motivation for it, is it the digitalization really the motive behind it? What is it that motivated now the ECB and, of course, all the other European institutions to think about creating a digital euro? What is it really that it aims?
The motivation is the way we all are behaving. I mean, digitalization is part of it. It's also about the role of a central bank, the role of public money. It's about the international role of the euro. So there are big questions around this that I'm sure we will discuss. So it wasn't just looking at an idea, cash plus digital euro. It's a bigger proposal than that. And I go back to the very key point for me. When we began discussing it in the services, I mean, I was very much open-minded and lots of questions, because I wanted to be assured of why we were doing it. And I go back to that line that I use and will use again. It would be very remiss of me as Commissioner had I not been involved in proposing this legislation so that the co-legislators and member states could look at this and they would have political ownership of it. And I think the ECB also realised that their work as the European Central Bank, clearly cash is there and there's monetary policy, but not to have a digital form of public money at some time in the future would leave a black hole, really, in our system. And I think that it's motivated more than just by digitalization. It's also by the way the public is interacting both in e-commerce and with how they make purchases. And you see that in behaviors changing all the time. Maybe one last remark, though, that the country that was leading on this, certainly in the European, is Sweden. And they were looking at the e-corona. And I think what's been really interesting is that while if I speak to citizens in Sweden, they don't use cash. Yet when it came to their parliament and this issue of cash plus digital central bank currency, they have slowed down, if you like, the push forward. Now, I think slowing down is a very healthy thing, which is why I repeat here that for me, I want this to be done in a way that people are part of the conversation, that they're not overwhelmed or even that they're fearful, because we know there are some fears around this. So we've done this some time back before the summer. It gives people time to reflect, gives the industry time to have their say, and it gives think tanks like you an opportunity to delve more into the proposal.
Indeed, and I forgot to say that we will also be taking questions from the audience. Please join us in Slido with the hashtag of CBDC. I will be monitoring. You're here to pose as many questions as you like to our expert panel. It's very refreshing to be able to take the time to design something for the future as opposed to have to always respond in a crisis mode. So for that, we are very grateful that you're thinking about something that is not maybe immediately relevant, but would definitely become relevant in the future. And in fact, I want to stay with with, if I may, what you call the why question, the motivation for doing this. And perhaps if I can turn to you, Governor Roller, and pose this question to you. You have now experience with using the digital equivalent of your currency. What was the motivation that pushed you to actually be one of the first globally to experiment with CBDC? And later on, we'd also like to hear your experiences, but perhaps to begin with, what motivated you to go down the quick way in constructing CBDCs?
Thank you very much. And I appreciate this opportunity to speak about central bank digital currencies. This was a journey for the Bahamas that did not start out with the CBDC being the objective. We want a push to modernize the payment system and to introduce new participants into the space. So the Bahamas was fortunate in that we started the journey of introducing fintech providers of payment services when questions around interoperability were very much being bantered about internationally. And so we had to decide as well early in that process, what should we do to ensure that we have an interoperable space for digital or mobile money? This is happening in a country where even today, the use of mobile payments is still very much at an infancy stage. So we after going through the thought process, we decided that a central bank digital currency was a way to facilitate that process. But at the same time, the motivation for modernization of the payment space was to advance financial inclusion goals in terms of making it easier to provide the reach of financial services to the island, less populated communities of the Bahamas. So the archipelagic nature of the Bahamas meant that we had to do more than just rely on the physical branch network to supply, say, financial services in those communities. And so if you're going to try and enable digital provision of services in a very small countries where aspects of your infrastructure are more akin to public goods than even in some of the more advanced countries, you can't just wait on the speed at which those developments would take place if left entirely up to the financial services providers. And so in that way, you could view the central bank digital currency or the sand dollar almost as the public good in terms of providing the infrastructure and helping to accelerate our thinking as to how we deal with the cash-like properties of central bank digital currency and how you build a regulatory and a governance infrastructure around access to cash in digital form that is as non-discriminatory as access to printed money. So those factored into the process. And now I think we're at the stage where, having done so much work, because it is a multi-year process, even in getting to this point, and I would say that we're probably not even halfway through the journey of completing the introduction, but getting to this point was very important to understand the governance and all the related issues. And I think now we're in a position that we can focus a lot more on adoption, working with our banking institutions particularly, and providing the kind of public education and engagement around digital payments and being street smart, so to speak, when it comes to the use of digital financial products, which we think is very important in terms of getting to the next stage. But the commissioner is correct that there is a very important futuristic element that we have to bear in mind in terms of the transformation and the journey itself. Thank you.
Thank you very much, Governor. And there's a number of very interesting things that you discussed, which I would like to perhaps come back to. You've talked about the need for meeting a public good. I mean, that is actually the nature of CBDC, providing a public good. You talked about the infrastructure and the modernizing the payment system, so the modernization of the system of payments. And of course, you have physical constraints that you need to meet, in geographical constraints, you might call that, which may not be relevant for other jurisdictions, but they're very relevant for you. And I wanted to perhaps maybe a brief question before I go to Mr. Alvarez. The public nature of public good nature of CBDCs is very important. So the public good is something that cannot be picked up by markets. In Europe, we have a number of private payment systems that compete under market conditions. We have very strict regulation. We have way of monitoring all this. And we also have the digital infrastructure. By that I mean we have the connectivity and we have web services that allow us for the markets to develop. Is this one of the issues that you're trying to solve? I mean, because you need to have a digital infrastructure before you can impose a CBDC, because otherwise it will not open up. Is this part of the equation?
Absolutely, because when you think about things like the automated clearinghouse for retail payments or the real-time gross payment settlement or RTGS system that countries typically have, in some cases, it's all private sector provided. The Bahamas is an example where the commercial bank provide the retail settlement system, but Central Bank led the way in providing the RTGS system. And again, it is recognizing that to get part of the infrastructure in place, it often needs the public investment and the public effort. And I think in terms of digital transformation, a part of this is understanding from country to country exactly what aspects of our financial sector infrastructure needs to be motivated and pushed by the public sector as opposed to left to the private sector, and then determining, once you've said that line, what it is that the private sector does in terms of taking the developed infrastructure to the next level.
Wonderful, thank you very much. If I may come now to Mr. Alvarez, you come from the banking sector. This is an alternative payment system. How is that going to affect your business? How do you see CBDCs evolving in the space of a financial payment system and your role in it?
Well, thank you to Google for having me here. As a banking institution, I want to go a step back where the Commissioner McGuinness started. And I should say first that we are discussing here about retail CBDC. We are starting the problem for the difficult part, because the easy part is the wholesale CBDC, where the benefits are pretty straightforward. Yeah? So international cross-border payments, and when I mean cross-border payments, not inside the Eurozone, between countries and others, is where the advantages of the digital currencies and the technology, the blockchain technology, is very clear. Those payments are still fairly ineffective, and you can make significant efficiency gains and strengthen the competitive position of the Eurozone, Europe in general, vis-a-vis with this. But having said that, as the first point, we as a financial institution, when we look at the motivations that were stated for the digital euro, the first one was monetary anchor. Well, Commissioner McGuinness said, well, maybe the cash disappear over time. As a matter of fact, the cash is growing. So when we look at the amount of bills in number and volume of euros, still growing a lot. So the cash is far from disappearing. It's true that we use more digital payments because it's more convenient, because blah, blah, but the cash is far from over. And this, I was happy to hear Commissioner when she said there is no pressure and we need time to define properly this, because I think that this is the case. We need time to define properly how this is going to work. As a bank, The first motivation that is given, monetary anchor, well, we have very little to say on this. So, but the education we need to give our customers. So, and the education is suddenly you're a customer, you have a current account in our bank, and suddenly I tell you, you need another current account. You know what? This new current account has a different euro than the previous one. This is not in the mind of the ordinary citizens. When they think in the euros, they think in the cash bills and in the current accounts in the bank. Suddenly we're going to go and say, oh, no, the first euro and the third euro are the same. The second one is a bit different, yeah? So I'm going to explain to you. So, and this worries us. We need to face this reality because we're going to be the ones to explain. Also, in relation with this, we have to explain to them to duplicate the current accounts. Not a small thing. So suddenly, if 100 million Europeans decide to use the digital euros, we're going to open 100 million current accounts. Don't underestimate the tax, 100 million current accounts. Yeah? So you need to do all of this. And all the operational side, we need time to assess properly this. Yeah? So because suddenly you have transactions between the traditional current account, the new current account in digital euros, and this every time you pay, you have this kind of transactions coming and going, and this is operationally is this. I don't want to mention financial stability that is there. When you go, the money goes from the current account A, the bank current account, to the digital euro. We can lend less because we have less deposits that go to the central bank. How much is this? Depends on the adoption. We don't know. So work needs to be done to see how much can this affect this. So this is something that worries us. The second motivation that is given in the when the work of the retail CBDC was launched is the what is so-called strategic autonomy in the payment system. So we depend largely on the two large American players, and we want to create our own, having our own payment system with autonomy that allow us to control everything. Well, I can agree. I agree with this. This is an objective, a political objective that I can understand in geopolitical terms. We need to make sure, and this is something that we need to work on, that we create something that is efficient. And is efficient in itself. It's not efficient because we create a kind of environment that makes the payment system efficient. So it's not going to be efficient because we reduce the caps in the interchange fees. This is not going to be efficient. So it need to be a win-win for citizens, merchants, and not to have a cost that goes to the ECB or to the banks that is significant because we are implementing a less efficient system than the one we have. So we need to work on this. Yeah. Mm-hmm. So, and in the relation with this, we already have instant payments in Europe that are extremely efficient. P2P, extremely efficient. And those should be, in my view, incorporated into this discussion. So they are there, they are working with the bank accounts, but they can work with the digital euro. Instead of building something new from scratch, we may go for what is so-called interoperability of the instant payment systems that already exist in several countries, instead of going to build something new that we don't know how it's going to work.
You mean between countries that don't communicate?
Well, we can incentivize those national instant payment systems to work together, to be interoperable for the customers to have a seamless payment system from one country to another. This is technically is not difficult. Probably something to discuss with the ECB, with the Commission, and the Parliament to take into account this. This is the second part, that is create a European, let's call it in that way, payment system that fits for purpose. And finally, the third one is more in relation with what Governor Joel says. Governor Joel says financial inclusion. That's probably is more important in Bahamas. I'm not an expert in Bahamas, that it is in the Eurozone. In the Eurozone, there is a proposal for offline. Offline, I don't know, but we need to assess. Based on my experience, offline can be very expensive for solving a very small problem. In Europe, I mean. It's because offline, the complexity of designing offline in digital euro is not obvious how to do this in an efficient manner for a problem that, in my view, so I'm not an expert in some countries, but looking at the statistics, 98% of Europeans have a current account, so we try to solve the 2%, and the offline that I know is on the table is maybe a significant problem for maybe significant cost for a relatively small problem. You may say, oh, you are marginalizing this. I don't know why a person that has now, for whatever reason, been able to open a current account in a bank is going to work with the digital euro. I think it's much simpler to open a current account in a bank than go straight to the digital euro. This may be in countries, in regions where there is no payment systems. 60% of the population has no current accounts. This is our experience, for example, in many Latin American markets where 40% of the population has no current accounts. And Governor Joel's proposal, and this kind of proposals, help a lot because suddenly you do financial inclusion for a material percentage of the total population. So having said that, we have no choice than to work in the digital euro, in the CBDC. The question is to define well. I will bet more in doing in quality than in speed. Okay, for me, it's critical to do it well, not to finish tomorrow. So I will not be in a hurry at all. Yeah. So
I think on this point we agree. On the other points, I'm not so sure we agree. But I quite like the way you have dissected this central bank digital euro proposal. So we agree that this is a proposal that needs time and thought and public debate. And public debate, in my view, is key. And I was a member of the European Parliament, so I have a lot of contact with citizens, and I always would check in with how people are. And when I make the expression in my speeches, cash is king, it's the one line that people resonate with because they have a belief that cash is really important to them. But they also realize that if they look at their own practices, they don't use cash as much as they did before COVID, for example. Now, I still agree with you. Cash is well used, and it will be. But the work around preparing for Europe, a central bank digital euro, is absolutely key. Now, the industry is as hesitant as you have summarized. I mean, this is how I would expect, because it is new and it's different. But let's take the payment landscape. We don't have a pan-European system of payment. No. We have different systems. So this could certainly solve that particular problem. And I think that would be a real bonus. If you look at the behavior of the generation of my children, people in their 20s, it's very different than when I was at that stage. So I think we have to be thinking of the generations to come as to how they will interact with money. And I don't know about you, whether you in your bank give a physical piggy bank for children to put money into, but many children don't physically hold money anymore because their parents are digital. And I gather that grandmothers and grandfathers are trying to teach children quietly, this is what a coin is and this is the value of it, which I think is an important part of the conversation at a societal level. So for all of the concerns you raise there and you're questioning the why, I hope I push back sufficiently in meeting you halfway on the timing and the need to do this carefully. We didn't rush this legislation. We had lots of discussion around it. The ECB have been very engaged in also analysing and discussing with us, and we're at a good place now. The legislation is out there, and I have to wait and see how the European Parliament will amend and how the member states will react and amend. And all of the issues that you raise, I'm sure, will be raised across our member states. But I keep coming back to the core point that we were actually duty-bound to look at this in order that the public conversation about money about cash, about digitalization, resonates with citizens, and it may change behavior. So I may have already said I decided I would use cash a lot for the last 2 weeks. And actually, it was acceptable. I didn't find anywhere that people refused to take my cash. And I think if the commissioner who's responsible for this area is seen to be using cash, that's also a signal that we want to make sure our citizens are not being led by some of the theories, conspiracy theories around why we are doing a CBDC. If I listen to the governor and the Bahamas, it's slightly different reasoning, I think, behind your work and why it was rolled out, although many of the reasons certainly resonate with what we're doing here in Europe. On the financial inclusion piece, it is part of the conversation. And I think generally on financial inclusion and financial literacy and awareness, I think we all could do a great deal more, whether we had a digital currency or not, around having a more financially savvy citizen. And I hope we will continue that conversation, whether it's in hard cash or in the digital format. So I hope that this conversation will lessen your fears and anxiety as an industry, because quite frankly,
for me it's not a fear.
yeah, no, well, anxiety
for
maybe.
me it's more a
Caution.
a question of how to solve a problem that, in my view, is relatively minor. I prefer to open accounts to everyone else.
But you don't need to solve a problem.
Instead of creating an offline
It's not to solve a problem. This is an opportunity, given the way the world is moving around digitalization.
Yeah.
And that's why I think the debate we're having today and the debates that will follow and are happening in parliaments in member states are key. And you will see that in some countries already, legislation is being proposed around access to cash. So where are the ATMs? Can people use cash? And digitalize will do this, very considered, reflecting what people's concerns are and also the concerns of industry. But there are opportunities with this as well. I know you made the point about wholesale versus retail, and I take that point. But for retail also, I mean, there are many places, maybe on some islands, that you can't use your internet, for example. And if you don't have cash, how do you actually do a transaction?
No, I'm not arguing against cash.
Yeah.
So the traditional bill should be available everywhere for the European citizen. My point was more about the offline digital euro. That is something that probably, and I am guessing, so when I ask people in the band, try to design this, they say, oh, this is maybe very costly for a small problem. No, I'm not talking about to have access to the cash through ATMs, even in the most remote places in all across the Eurozone. In fact, we are signing with the Spanish government to have ATMs in towns of, 200 people. And we are doing kind of agreement among all the banks to provide these services in remote places for the people to have access to cash. I don't have a concern in relation with this. It's expensive, but it's doable. But to develop this exactly that is expensive for the offline digital euro, I wonder if this.
If you allow me, because we are going to the details of this, which I think is important. There's more details actually, and since we have the commissioner here, we would like to understand what are the details. But if I may, I actually think what Mr. Alvarez is pointing out, and I think Governor Rolle actually made this point, is this the public good nature of the CBDCs, and why can't markets provide solutions to all the problems that you raise? We don't have a European payment system. We don't have digital formats of payment that communicate with each other. Why is the digital euro necessary as a solution? I mean, what is the role that markets cannot pick up that require public intervention? Because effectively that's what we're doing. And I remind you, public intervention means taxpayer. The taxpayer, therefore, is developing a CBDC. Is paying for the development of a CBDC. Why can't markets do it? And I think this is the public good nature of a central bank digital currency that I think, at least from the point of view of the consumer, is important to justify, given that it is them that have to pay it. But I mean, I'm just raising this question, and please, I would like to hear your thoughts. But I would also like to go in a little bit more on the details, particularly in the Eurozone. Here, people have a lot of anxieties about what this means. Not only what is different between a digital euro and a CBDC, but also issues of privacy. And I know that you care deeply about this issue of privacy. If you can tell us a little bit about how you see this. There is another question that coming into the feed about the fact that there won't be any interest payments on the cash that you hold as digital euros. Why would I ever have an incentive to switch from having a bank account at Santander and moving it into a digital euro account when it won't give me any interest rate? So can you tell us a little bit about how you see the design of the digital euro encouraging or discouraging the uptake?
Where do I start? I mean, on the point first, if I may come back, this online and offline. The offline is really important because there are moments when you do not have access to the internet and you need a transaction offline. And technology will evolve. And as you mentioned, it's costly to provide cash. I don't think it will be very costly to provide the technology to provide for the offline. On the bigger question which was raised, and it links to your point about financial stability. Now, clearly, if you had a situation where there was a transfer of all the cash in the banks towards a digital euro, then you have a problem in the banks. And, the ECB are not in the business of creating problems, and indeed we are not either. But we do want to provide a digital option if people don't have cash or aren't using cash. And that's why it's not in the legislation, the exact limit, the holding limit that will be there, but this is something that will be looked at, I'm sure, by industry and co-legislators and indeed the ECB, which links to the point around no interest bearing because it's for transactions, so it's for payment purposes. So it's not, if I may be very clear, that I would have my current account, I would close it with my bank and move it all to this other account. But what I would like to have when I don't carry my wallet with cash in it is that I have an app here which has my central bank, my cash digital equivalent, and I can do some transactions using that. And I think that's in the simplest form to explain. I think back from that then, the questions you raise, and I hear them very detailed about, the what if and why, etc. We have to deal with all of those questions in a way that doesn't provide for financial instability, because part of my title is financial stability, but also to repeat the point that if we are to be future focused, both as a European Union and looking at the wider role, the international role of the euro, then I think digitalization of our currency is in that direction, while also providing for cash. A lot of the design features will be part of the discussion. And I think that's why it was important for me as Commissioner to have this proposal out as we enter the last phase of this Commission mandate, knowing that it will not be through the legislative process until the next Commission and next Parliament are in place. And I think that should give some reassurance to the industry and some time also for citizens and businesses to actually think about what are the benefits. So, for example, people who've used credit cards all their lives, but never really go over limit or whatever, may decide, actually, I don't need a credit card. I can have my app with my digital euros in it. So it could change how we interact. And I think that, and I repeat this point again about we don't have a pan-European payment system. We should have, but we don't have. This would add value. And I know one of the points is, what value does it add? And in my view, this is an added value part of a digital euro, that it would be usable across the European Union. And I think for citizens who work and travel or whatever, this would be hugely beneficial. But again, the conversations have to take place in town halls, across if you still meet customers, across the counter with your customers, so that there is an understanding on all sides that this has benefits. But I suppose my last point on this is, the consumer is king. I mean, if it's introduced by the ECB and they decide we launch this, and if it's not used, then that's the ultimate test. So it is in the interests of all of us to make sure the design is fit for purpose. And the work we've done thus far with the ECB is certainly in that direction, taking account of all the concerns that you have raised, but also looking at it from the benefits of consumers who want choice and who want options. And to some extent, if you look at the payment landscape, but there's lots of different ways, and there's one particular player in the member state I know best that are practically 100% there. And it wasn't because they advertised heavily, it was word of mouth. So people thought, this works, I'll tell you, and you tell somebody. And that's how that particular system gained traction. And I think it will be the same with the digital euro. I would hope that maybe in a year's time or so, we'll be more familiar with the concept. And that all of those issues you raise will be addressed. But it is going to bring about change. And I think that's the point I was trying to make, that, banks are changing all the time. Your engagement with citizens, with business, is changing all the time. Part of that is digitalization. And therefore, in one sense, you'll have to find ways of accommodating the likely introduction of a digital euro. But again, that's the ECB decision.
Well, maybe we can ask
I
Governor
can-
Rollo to come in, please. Feel free to react to anything on that you just
Yes,
said.
so just by way of experience, and again, we're very, very early in the process. When we have outreach to the business community and we talk about sand dollar, and part of the process of them getting to understand that it is a CBDC, it does not matter how much we tell them it's not cryptocurrency, it's something else, because we think that's a learning process. One of the questions that typically is asked for someone who's thinking about accepting it for payment is, okay, now that I've received it, how do I get to use it in the way I really want to make my other payments, et cetera? And what typically businesses are getting at is, how do I now get this as money in the bank? And the lesson there is that this is cash in a different form. It's not a new invention. And to the extent that it is cash in a digital form, it is conveying what is intended to convey value from one location to the next. And once it reaches the next location, it can transform, in this case, into traditional bank deposits and the like. And from that point of view, it becomes a bit of a dangerous situation to start to design a CBDC to behave like a deposit and to reward the holders of CBDC, retail CBDC, as if you're rewarding them for the deposit, because the deposit serves a different purpose, and we don't want to incentivize displacing that. So what has been continuously important for us is to say, if you're designing a digital instrument that is supposed to be cash-like in all respect, with the added trappings of the safeguards around financial integrity in the anti-money laundering sense, make certain that you don't try to add features to it that take away from its cash-like properties. Now, in the private sector, in terms of how innovation takes place around any new instrument, whether it's central bank liability or not, that's a different issue. If you're an electronic money provider in the Bahamian landscape, and I think this is also the case in other countries, those are not considered deposit-taking institutions, and therefore they exist only to provide a custodial type relationship in terms of holding funds that might be in a mobile wallet until they are used for payment. So it's always 100% liquidity, always available for use. And from that point of view, I think it helps to be true to how you want to see the digital representation of central bank liabilities, not looking any different from the way money services providers might be providing digital wallet services in the cases where there is not a CBDC involved. But I think also when we look at financial inclusion in an international sense, we're going to also have to be thinking about how CBDCs fit in, perhaps in some cases, and in other cases not, from country to country at the retail level, and how we meet the global goals around the ease of transferring payments cross-border, recognizing that some of the ideals that we've set for 2027 have to do with a P2P payment leaving Brussels or London and making it to a country at a peer-to-peer level in the Caribbean, South America, Africa, or Asia. And we have already set certain ideas as to what that should look like and what the costs around that should look like. So the quality of the infrastructure globally is going to matter. And I expect that the intervention could look different from country to country as to how you achieve that P2P transfer on a cross-border basis. And I thought that was a very, very important way of articulating the target in terms of the kind of improvement that you want to see in the global payment landscape, And I think even at the wholesale level of central bank digital currencies, where many countries in the Caribbean, Africa, and other parts of the developed world are challenged with correspondent banking relationships. Be careful again how much of it you leave strictly to the private infrastructure, because you will not meet those goals if there are hindrances at the correspondent banking levels, which are some of the challenges we currently face. And they won't go away if we don't resolve the issues to how you ensure financial inclusion at the wholesale level.
Yeah.
In terms of cross-border payments.
So this is the remittances issue, and I think that's it's a very important issue, certainly for certain countries. If I may, I have one more thing that I'd like to discuss, and that is the wholesale, because we need to talk a little bit about the wholesale and the innovations we have here. But before I do that, I would also like to give the opportunity, given also where we are in time, for people present in the room, if they wanted to ask a question, please raise your hand, and I'll try and give you the mic. I presume we have mics in the room. I see a lady at the back, please. Can you tell us who you are and if you can phrase your question?
Sure, thank you very much. Can you hear me?
Yeah, there's a mic coming your way, please.
Thank you very much. I'm Elisa Newby from the Bank of Finland, from the Central Bank. I would like to ask what we have to have in mind to ensure that the digital currencies increase financial inclusion and not decrease it, so that actually it brings everybody, people on board regarding digital payment systems.
Okay.
Thank you very much.
Thank you very
This
much.
was
One more question.
excellent.
The gentleman there in the middle, please. It's interesting to hear that they might actually decrease
Hello.
financial inclusion. Yeah,
This is
please.
Pablo Zalba from
Increase and not
Deloitte.
decrease financial inclusion.
I would like to highlight what we mentioned at the beginning regarding the geopolitical aspect, together with what you have been debating, both Commissioner and both Jose Antonio, regarding the offline. And also, I do believe that we need to engage the financial industry in this issue. And putting all together, at what extent will make sense to give the chance to provide the digital euro to other citizens beyond the Eurozone?
Okay.
And in that case, probably will make sense what Jose Antonio said regarding the offside euro, when in this case financial inclusion may be a challenge in countries where Banco Santander has or BBVA has clients like Latin America.
Yeah, thank you very much. We will come, actually, the geopolitical question is actually a very important one. But before we come to that, if I may, Governor Roller, can you please tell us what is the uptake, if you have the numbers, what is the uptake of the Sand dollar in the Bahamas?
The numbers are still very low, and they're still very much tied to the new fintech providers who have very, very small market in mobile wallet payments.
Yeah.
So we expect to see more meaningful movement in use and adoption as we deepen the engagement with our commercial banking entities, because the preference that is expressed a lot is that people also want to have an easier access through their established financial relationships.
I do. And do you perhaps have an answer to the first question, so that there is the possibility of the CBDC actually decreasing financial inclusion, not just increasing? Do you see a problem there?
The financial inclusion issue really is about helping those in the informal sector have access to the modern means of transacting. So financial inclusion in this space is really about providing those who are not yet using any sort of formal or very minimal formal financial services to be able to do so. And that means being able to make payments digitally. And from that point of view, you have the users of the product, those who are making disbursements to those users. In the case of the Bahamas, the government still has to ferry cash to certain parts of the Bahamas in communities where there is not even an ATM to make complete payments. And then there's the merchant side, meaning that if you're looking at it from the micro and small businesses, particularly, the element of financial inclusion that's also important is that they're being able to receive payments equally from those who might be presenting the digital solutions in those settings. So for us, financial inclusion is making certain that at least on the margins, small businesses are equipped to receive electronic payments, and that those who are still constrained to only make payments in cash or to receive payment in cash, they have the option. And as Commissioner was mentioning earlier, it is really about the option more so than mandating that it must be done one way or the other. And I think that is the very important aspect of financial inclusion that we are targeting in the Bahamas.
Wonderful. Thank you very much. Perhaps I can go then to the next question that Pablo raised, and using his question to perhaps segue into this issue of the geopolitical aspect of it. First, let me say that the evidence on the wholesale CBDC experiments that have been done so far are showing huge improvements in cross-border payments, I should say cross-currency payments in the case of the euro, both in time and in money. So, and actually manifold improvements. So it's almost a non-brainer that the wholesale CBDC, which by the way, we have it already in the euro system, it's just that we don't have it on the blockchain. But if you put it also in the blockchain and therefore allow the communication with cross currencies, could actually have a huge potential for benefits. Yeah, and I think that's also what you mentioned, Mr. Alvarez, in your initial comments. But I wanted to bring in the geopolitical element, and Pablo raised the issue whether we should allow non-euro residents to have digital euros. Here comes also what you said, Commissioner, at the beginning about the international role of the euro. Mm-hmm. Can you give us a sort of how you're thinking of where is kind of the digital euro going to help us in terms of placing the Europe in the map? Globally, I mean, for the moment, we are the second currency being used in reserves, very distant to the dollar in the way that the euro is popularly used across either trade or investments globally. Is the CBDC a way of improving the international of the euro? Should it be? And, how would that serve European citizens' interest best?
Well, I think, first of all, if we do eventually see a digital euro, I think it future-proofs the euro. And the euro is the European currency. And as you say, we're second globally. So I think we'll strengthen that. On the issue of whether it will be just for Eurozone only or we could deal with non-Eurozone and others, I mean, that's about relationships between central banks, so that's facilitated, that you don't interfere with the sovereignty of other players. But I dare say that would be part of the conversation. So yes, I think it is important for the role of the euro at the international level. I think and I link it with the first question around financial inclusion. I mean, the digital euro should be designed for ease of access around financial inclusion, rather than it causing, as the question was raised, problems with financial inclusion. So I suppose there are many different elements to what the digital euro can provide for the individual, for businesses, for banks, because there will be opportunities, I'm sure, to provide services, and then on the global scale. And I suppose in a world which is very much now multipolar and fragmented, I think it's important that we do work and strengthen the international role of our currency. I think not to do that would be really remiss, as it would be if we were not planning the work and preparing the work around the digital euro. Ultimately, this comes down to if it works. So in one sense, the way we have tackled this question is to make sure we answer all the questions you raise and others will raise with us, so that the design is fit for purpose and that people will see its advantage rather than feeling they're being twisted or their arms being twisted to use it. That's not how it should be. This should be seen as an added value for European citizens, but also for merchants. And I think the Governor made the point around merchants and the capacity of merchants to deal with digital transactions. So, I mean, there's lots of scope around how the digital euro, not only at the international level, would enhance the euro itself, but also for you and I and businesses. This is something that be new and dynamic and can lead to many other advantages, rather than us perhaps being a little cautious around the what if. But I feel we've done a lot of the groundwork on this. And as I said, the debate is open now for those who want to feed into it. So yes to the international role of the euro in a globe which is much more fragmented. I think that's in the interests of citizens. It's in the interests of European business. And you mentioned an important point around remittances, because we know this is very costly. And if we can do anything to ease that burden for those who are sending remittances, I think this is also a plus.
Indeed, Mr. Alvarez, you were maybe lukewarm on the value added of the retail. Tell me if I'm wrong.
Well, we
But
need
on
to show that there is value added. We don't. Depends how it's designed.
Sure.
The digital euro. We need to be careful not to create a kind of monopolistic situation, artificial monopolistic situation in the payment system, crowding out private systems. It's good to have competition in the payment space. Good to have competition. It's good.
Yeah.
So be careful. The way we design the digital euro, we don't go that far that for the digital euro to have success to create an artificial advantage over other players in the market. It will be a mistake. And in relation with the other issues that were raised, 2 comments. You asked why not to pay in the digital euro interest. Well, in that case, will not be cash, okay? Cash-like, so will be different. It's an investment, so that's to me clear. And the question that were raised from the audience, how the non-Eurozone citizens have access to the euro. If the digital euro is not to store value, not an investment, well, the asset should be the current one, or they hold physical bills if they want, for whatever reason, or they have investments in banks. It shouldn't be other way around. Other way will be discriminatory against the European citizens because the others can have store value in the digital euro.
So
European
you want
citizens,
reciprocity?
no. Investment in the euros, no.
Yeah.
No, it's the level playing field.
But can I ask you on the wholesale?
In the wholesale is clear, yeah. In the wholesale, the international payment scheme, with all the SWIFT corresponding banks that the Governor Joel was mentioned, still can be improved significantly.
So maybe we should go faster, not slower.
And well, there is experience there that work. And I was surprised a little bit not seeing the ECB or the Commission or Europe more keen to develop this, because Europe is the European trade will be gain competitive advantage for this, and this is something that I pursue for sure. Yeah. So in this space, and this was a surprise to me not to work on this and go into retail. That is more demanding, it's more difficult. That I appreciate a lot. But while the other side is doable, yeah. So.
But the ECB are working on the wholesale as well.
I know
yeah,
that.
but if I may,
Just
but Manu, just on this thing, this is the time that the standards are being set. You see, because there are others there that are doing it, and if we wanted to benefit from the wholesale revolution, which I personally believe it is a revolution, maybe this is the time to be a little more active on the way that we participate globally in the way that this standard setting is going, or otherwise we may risk sort of having to catch up. But with that, I'm very wary of the time, and I just wanted to give Governor Rolla the last word. Your final thoughts on CBDC. Any advice you would like to give us here in the euro area as we are in the process of thinking how to move next?
Well, I would say, and based upon the sentiments that are being expressed, particularly by Commissioner McGuinness, that you have to explore the issues and be mindful that it is a drawn-out process. I would say, even in the case of the Bahamas, we know that if we're halfway through that journey, I would say that we've progressed considerably. But it will take time, and it is also important to continuously reflect on the individual national circumstances that are involved. Because I think that matters in terms of understanding, how you see the role of the central bank versus the banks in terms of the kinds of institutions that are happening. So I think that's very important, to be very mindful of what's happening within your national circumstances. And then the third thing, I believe, is to begin to think about how the central banks themselves have a role globally to play, and how we might want to define financial inclusion in any new context, whether it's at the level of small businesses or individuals or entire financial systems in various countries, depending on how they participate globally. So I think all of those factors will help to determine how even the euro is shaped digitally. Thank you.
Thank you very much, Governor Ireland. Thank you so much for taking the time to connect to us. We are 2 minutes over the time, so I will not abuse your patience anymore. It was lovely to hear from you. Thank you for sharing the experiences of the Bahamas, and I'm hoping that we will be able to catch up in another occasion. And of course, a very big welcome to my other guest here physically, Mr. Alvarez. Commissioner, it's always a pleasure to have you. Thank you all for joining us, and please join me in thanking the panelists for contributing.